$1.2 trillion in a single quarter. 12 mega deals over 10 billion. My former banker friends are literally ordering new boats.
Tell them to check the footnotes. Overall transaction volume actually dropped 17%. The market isn't healthy, Nate. It's just top-heavy.
Oh, come on, the money is flowing. 4 of the 6 biggest deals globally were AI equity plays.
Flowing into a very specific bubble, maybe. But fine. Let's talk about where else those billions are going. Like Intel dropping $14.2 billion to buy back its own Irish fab. The rundown. Volume dropped 17%, but overall deal value spikes to over $1.2 trillion for the first quarter. Make that math work for me, Nate.
It's all mega deals. We had 12 transactions over $10 billion close in Q1. That's the highest number we've seen since 2008.
Which should terrify anyone with a memory. Everyone's just writing blank checks for AI equity. 4 of the 6 biggest global deals were AI related. We're buying narratives right now, not cash flow.
You're too cynical. It's not just AI driving this. Look at Intel. They're dropping $14.2 billion to buy back a 49% stake in their Ireland fab joint venture.
They're buying out Brookfield, and if you read the footnotes, they're just shuffling capital around to clean up the balance sheet for government subsidies. It's financial engineering.
I strongly disagree. It's a brilliant consolidation play. You absolutely want total control over your European fabs right now. The regional data completely backs it up. European acquirers are outperforming their benchmarks by 6 percentage points right now. North America is totally lagging.
I'll give you the Europe data. Antin Infrastructure Partners clearly agrees. They just bought Sapphire Gas Solutions straight from Apollo funds.
Classic private equity passed the parcel. Apollo polishes the asset, hands it to Antin.
Speaking of polishing assets, Värde Partners just led a massive $1.7 billion significant risk transfer transaction with Klarna.
$1.7 billion. Risk transfers are the hot new trend, and I'm completely here for it.
Don't romanticize it, Nate. It just means Klarna is offloading consumer debt risk, so their financials look pretty for an IPO.
I'm a former banker. Romanticizing balance sheet cleanup is my primary love language.
Clearly. We also saw Warner Music scoop up Revelator for digital rights management, and GDC IT Solutions bought Global Help Desk Services.
Very practical bolt-on deals. But you're ignoring the actual Wall Street whispers, Estee Lauder and Puig.
Advanced talks for a massive stock-based combination. And the big one, Tay.
$1.2 trillion in a single quarter. I had to refresh the terminal 3 times because I honestly thought my data feed was broken.
It's practically a barbell market right now. If you look at the actual volume of transactions, we're down 17%. Nobody is doing those standard middle market roll-ups. But the mega deals? 12 deals over $10 billion. We haven't seen concentration like that since 2008.
And you know exactly what's driving the heavy end of that barbell. 4 of the 6 biggest transactions globally were AI equity plays. Tech giants are terrified of missing the compute boat, so they're just buying the entire dock.
Which brings us to the $14.2 billion elephant in the room. Intel buying back a 49% stake in its own Ireland fab joint venture.
I love this deal. It's a massive flex. Intel is looking at this AI compute demand, looking at the geopolitical supply chain and saying we need absolute unquestioned control of our most advanced European manufacturing. It's a brilliant strategic pivot.
Nate, they paid $14.2 billion to buy back half of a factory they already built and operate. I read the original joint venture agreement. They essentially took out a corporate payday loan using the fab as collateral, and now they're buying it back at a staggering premium. It's terrible capital planning.
Oh, come on, a payday loan? That's ridiculous. It was a strategic capital partnership when cash flow was tight during a restructuring phase.
They pawned their Rolex to pay rent and just bought it back from the pawn shop for triple the price. You can't spin that as a brilliant expansion.
Okay, the pawn shop analogy hurts because it's a little bit accurate, but you have to look at the current macro reality. Completed deal values just hit a 5-year high of $438 billion. If you want prime semiconductor real estate right now, you pay the premium. Even to yourself, they're securing capacity for the AI wave.
I just hate the press release narrative that this is some aggressive growth move. It's a balance sheet cleanup disguised as a mega deal. And honestly, North American acquirers are taking a beating in the markets for exactly these kinds of bloated moves. Have you looked at the regional performance data?
Yeah, North American buyers are notably underperforming their industry benchmarks right now.
Exactly. Meanwhile, European dealmakers are outperforming non-M&A companies by a solid 6 percentage points. They're doing smarter, tighter deals, while US buyers are just throwing billions at their own joint ventures.
Which is fascinating because the loudest whispers on my desk this morning are actually about a massive transatlantic consumer play that might test those European valuations.
Are you talking about the Estee Lauder and Puig rumors?
You heard it too. Advanced talks, primarily a stock based combination. If they actually pull off a merger of that size before the week closes, we might see the consumer sector finally steal some headlines from the tech and AI crowd.
I'll believe it when I see the actual exchange ratio. But speaking of dragging out timelines, Gilead is playing games with its Arcelix tender offer. We need to talk about why they just pushed that expiration date again. Voices.
You read the new Q1 analyst note. Transaction volume is actually down 17%, but completed deal values hit $438 billion.
A 5-year high on fewer deals. The math only works if the deals are absolutely massive.
Massive is an understatement. We saw 12 mega deals over 10 billion close. That is the highest number since 2008. The whales are officially feeding again.
Are they, though? Look closely at what they are actually buying. 4 of the 6 biggest transactions globally were just AI equity investments. It is not a broad market recovery, Nate. It is just AI FOMO wearing a trench coat.
Oh, come on. $1 trillion quarter is $1 trillion quarter. You can't just wave away 12 mega deals because they have 2 specific letters in the press release.
I absolutely can when North American acquirers are currently underperforming their benchmarks. The real winners in this report? Europe. European dealmakers are outperforming non-M&A companies by 6 percentage points.
Europe outperforming the US in deal value creation. I feel like I just woke up in an alternate dimension. But the American mega deal machine is still churning. Did you see the whispers about Estee Lauder and Puig?
Advanced talks for a massive, primarily stock-based combination.
Exactly. Cosmetics, not AI. Though I give it 3 days before they announce an AI-powered lipstick just to juice the valuation.
Please do not give them ideas, but if they are heavily leaning on a stock deal, that tells me they are terrified of current debt costs. They are using paper because cash is just too expensive right now.
Classic banker move. Use your stock while it is high. Speaking of using cash in weird ways, wait until we talk about what Intel is doing in Ireland.
$14.2 billion just to buy back a minority stake in their own factory.
We need to pull up those filings right after this. Spill the tea. I'm just saying, if you are Estee Lauder right now, you are looking at Puig and thinking, we need some of that niche fragrance magic before the market completely passes us by.
Sure, but a massive primarily stock-based deal? Right now? Estee's stock has been through the ringer. Using it as currency feels like trying to buy a Ferrari with Cole's cash.
Oh, come on. It is not Kohl's Cash. It is still a premium beauty conglomerate, and Puig literally just went public. If they lock in a stock combination, it is a brilliant defensive play for both of them against L'Oreal.
A defensive play where nobody actually wants to spend hard cash. I read that as zero conviction, and frankly, the European acquirers are the only ones actually making deals work right now anyway. Have you looked at the Q1 data? European dealmakers outperformed non-M&A peers by 6 percentage points. North American buyers are just chronically underperforming their benchmarks.
Which is exactly why Estee wants a European target. You are making my point for me, Maya.
I am absolutely not making your point. I am saying North American management teams are currently terrible at integrating targets. They destroy value.
Ouch, fair, but let us see if they actually sign the term sheet before Friday. Speaking of dragging things out, what is going on with Gilead?
The Arcelix tender offer. They just extended the expiration date again, keeping the whole market in suspense.
Which is classic banker for somebody found something incredibly annoying in the clinical data room, but we are way too deep to back out now.
Or they are just running into standard regulatory friction and buying time. I checked the filings, it looks procedural, not a red flag. Either way, keep an eye on that ticker tomorrow. They are running out of extensions.
Speaking of running out of time and spending massive amounts of cash, we need to talk about Intel dropping $14.2 billion to buy back half of its own factory in Ireland.
Oh, I have so many thoughts on that financial gymnastics routine. Tomorrow's radar.
Tomorrow, I'm just refreshing the tape for Estée Lauder and Puig. The whispers are deafening on this massive stock combination.
A stock deal? I'm not buying that rumor. North American acquirers are underperforming their benchmarks right now. Using that equity as currency is terrible capital allocation.
Puig is Spanish, Maya. European deal makers are outperforming by 6%. If they structure the exchange ratio right, the arbitrage actually works beautifully.
I need to see the term sheet. What I'm actually watching tomorrow is Gilead. They extended the deadline on the RSLX tender offer again.
Again? Oh, come on. Just close the deal or walk away.
Transaction volume dropped 17% this quarter. Buyers are terrified of catching a falling knife.
Terrified? We just saw $1 trillion in Q1.
Deal value, not volume. It's just 12 mega deals wearing a trench coat, hiding a completely frozen middle market.
Terrifying visual. Speaking of massive deals wearing trench coats, are we going to talk about Intel spending $14.2 billion to buy back its own fab?